Gentlemen, my name is Michalis and I'm the market analyst here at HFM, at HF Markets. Today is the first live stream webinar that we're going to be doing throughout our social media channels. And today we're going to be concentrating on the stock market. Specifically, we're going to be looking at what stocks can do for investors. Why are stocks the most popular traded financial instrument, asset, within the financial trading markets, and why are they so popular? Is there opportunity out there for traders to take advantage of the stock markets? Now, as part of today's webinar, what we're going to be doing is looking to build a strong, clear foundation in terms to get an understanding of how to look at the stock market and specifically how we can take advantage of opportunities within the stock market throughout this week. So, of course, we need to understand what are stocks, why potentially there are benefits to trading stocks, how we can trade stocks. And of course, as everybody is aware, when we're looking at the stock market, stocks are volatile. Sometimes stocks can increase in value, they can decrease in value. As part of today's webinar, we're going to look at understanding what is driving the price of stocks and how we can use this information in order to determine how the price is likely to move going forward. Because if we're able to determine how the price is going to move within a specific period of time, it is at that point that we can actually take advantage of the price movements. If we're able to understand and have the knowledge and confidence to determine how the price is likely to move, it's at that point that we're able to consecutively, successfully take advantages of potential opportunities within the market. So this is what we're going to be looking at today. Of course, we're going to start off with a strong foundation, a strong understanding of what are stocks, what potentially individuals can look at investing and trading, and of course, how we are able to establish what type of potential price movements we are going to see over the coming days. Now, of course, today's webinar is a live stream webinar. So, of course, anybody who has any questions or if something is not 100% clear, they can, of course, ask questions through the chat. If you are looking to ask questions through the chat, I, of course, will answer the questions live on the webinar. I will read out the question. Of course, I will not expose any sensitive information such as your name, but I'll make sure everybody hears the question and will answer it live during the webinar. Now, before we get started at looking at today's topic, very quickly, I want everybody to understand that here at HFM, we, of course, are dealing with investments. Now, no matter what type of investment, somebody may be interested in investing and trading, whether it's cryptocurrencies, whether it's the stock market. For example, today we're specifically looking at the stock market. What everybody needs to understand is, of course, we have no control over the price movements. There's risk, a certain level of risk involved in all investments. But this is, of course, why today's webinar is so important, because what we're going to look at doing is how we can limit that risk and take advantage of the price movements. I've got a question here from an individual. How can we predict the market? This is a great question. And of course, this is something that we're going to be looking at as part of today's webinar. So very quickly, like I said at the very beginning of the webinar, what we need to understand in order to be able to predict how the market is likely to move is to use advanced institutional methods to determine what is going to drive the price movement and in what period of time the price is going to move in that direction and to what level is the price going to be pushed to. If we're able to pre-establish those factors, it is at that point that we can successfully, consecutively take advantage of opportunities within the market. So, of course, this is something that we're going to be looking at throughout today's webinar. Now, I don't want to spend too much time on this slide because, of course, I want to get straight to looking at how we can take advantage of the market. But very quickly, because I do think it is important to know a little bit about the individual who is providing you with this information. Very quickly, my name is Michalis. In English, this is Michael. Some people can call me Michael if it's easier for you. A bit about my background. I originally started off as a financial advisor in London. I was a financial advisor for 4 years in London. Since then, I have been a market analyst, trading for a further 5 years. I've been investing in the financial trading markets for 10 years now. My motto, ladies and gentlemen, is how you can easily learn how large institutions are taking advantage of the market. Because I hear a lot of individuals and educators online who are looking at different strategies and tools on how you can take advantage of the market. But it's not ways that large institutions are trading. So what we're going to be doing as part of today's webinar is, yes, we're going to look at some basics at the very beginning, but we're going to start to dive into advanced ways, institutional ways of analyzing the market. So that way you can trade with confidence and you will have the knowledge on how to potentially identify strong opportunities within the market. This is the aim of today's webinar. So I've got another question. How do I know when the price is going to go up or down? This is, of course, a very good question. If you bear with me, there are specific slides that we're going to look at. Something I will mention before we carry on, just to answer that question, is that a lot of people say that the price is based on supply and demand. Now, to a certain extent, yes, the price is going to be priced based on supply and demand, but that's not going to help you to understand how the price is going to move. Yes, it's based on supply and demand. The more the demand, the more the price is going to increase. But how do you know at what point in the market there is demand? And this is what we're going to be looking at as part of today's webinar. How can you get access to understanding and seeing where there is demand within the market, where there is an imbalance? Because, of course, when we're looking at the market, the price is based on something very similar to an auction. It is bids and the sellers, which is also why on the MT4 and the MT5, some people have it set up to show bid and ask, because it's very similar to an auction. The more people that are buying compared to the sellers at that specific price, when there's an imbalance between what sellers, the amount of sellers selling and the amount of buyers buying, that is when we get volatility within the market. But this is something that I'm actually going to show you on the screen. I'm going to show you how you can see where there is imbalances within the market. So what are we going to start off with? What can we take advantage of when we're looking at the stock market? Yes, of course, we can take advantage of individual stocks. People have on that platform access to hundreds and hundreds of individual stocks that they can trade. But there is also advantages to trading what is known as an index. Now, some people that are experienced traders may understand what an index is, but over the first 2-3 slides, we're just going to do a very quick introduction before we start to go more and more advanced. So what exactly is an index? Everybody knows what a stock is. An index, ladies and gentlemen, is how you can take advantage, whether you're investing or trading, whatever it may be, how you can take advantage of multiple stocks which have been pooled into one single asset. Now, what's a very simple way of understanding what an index is for those individuals that have never traded before? It's like a shopping bag, ladies and gentlemen. When you go to the supermarket, you are buying multiple assets and you place them all within a shopping bag. This is exactly what an index is. It is one asset, it's got one price, but within the bag, there is multiple stocks. So the advantages of this, ladies and gentlemen, is that you are looking at a mitigated asset. The risk is spread across many different assets, and you are able to take advantage of the stock market as a whole because you are trading different stocks from even potentially different industries, or some indexes are specifically aimed at one index. So this is exactly what an index is. It is one asset, one price, but it has multiple stocks within the index. Now, an index may be designed in a specific way, so it's spreading the risk across a lot of different assets and also from different industries as well. And some indexes are specifically designed with a specific purpose. And we're going to look at indexes which are aimed at both, because there's specific characteristics of both of different indexes. Some index, for example, are aimed at being a defensive investment, and they're exposed to defensive stocks, whereas some indexes are actually designed to be exposed to what is known as growth stocks. So stocks which tend to grow at a significant pace within a set period of time. So we're going to be looking at both examples. Something that you should be aware of, though, is that when we're looking at the stock market is correlated. Now, what does correlated mean? It means that it's linked. It means that when one market is doing well, so for example, it could be an index such as the Dow Jones, it's going to be correlated with other indexes as well. Now, this makes analysis easier on our side because it's another tool that we can use to establish how the price is going to move. For example, we have European-based indexes and we have Asian-based indexes. For example, we have the DAX, which is a German index, we have the CAC, which is a French index, and we have the Nikkei, which is a Japanese and Asian-based index. Now, if we see that these indexes are increasing in value throughout the morning, because of course these indexes actually start to be traded throughout the morning, all the way into the afternoon. If we see positive price movements and the price of these indexes are increasing in value, this is an indicator that actually investment sentiment is high. We have a high risk appetite within the market. Investors are confident, investors are investing, they're buying, and shareholders are not selling their shares. And it's creating that imbalance, which is pushing the price higher. If we're seeing something like this in Europe and we're seeing something like this in Asia, there's a possibility, a strong possibility, that we're potentially going to see something like this in America as well. So a very good example was yesterday and today. If we look at the European and Asian markets yesterday, both markets were significantly doing extremely well. And later on in the day, when the US market opened, we saw much higher levels, a very bullish and strong upward price movement for the Nasdaq, the Dow Jones, and S&P 500, which are American indexes. Today, we saw European and Asian markets decline before the US market even opened. And again, we use that as an indication that indexes in America, once open, would actually perform extremely well. So, and the market in America has opened now almost 2 hours, and we can see that the market is declining. So already, just by this first slide, is getting an understanding, we already have one technique that potentially can be used to give us indications of how certain markets are going to proceed and develop throughout the day. Because all these indexes, they are correlated, they are linked. If we see investors buying in Europe, most likely they're also going to be buying in America as well. Now, the last thing I will say as part of this slide is that indexes are traded and they are priced based on what is known as the weighted method. Now, what exactly does the weighted method mean? This is something which is very important to understanding how the price is going to move. It's not, for example, if we look at the Nasdaq, and we'll move over onto the next slide actually, so we can exactly see what a weighted index is. If you look at the Nasdaq is an American-based index. The fund has 100 stocks within the fund. For example, some of those stocks are Amazon, Apple, Meta, Alphabet, very well-known global companies. But it doesn't mean that the fund is made up equally of these 100 stocks. So of course, doesn't mean that Apple stocks have 1% of the fund, Amazon stocks have 1% of the fund, and so on and so forth. The fund is not equally split out between these 100 companies. It is known as a weighted method. Now, this means, ladies and gentlemen, that actually certain companies have a larger percentage within the fund. So, for example, Apple has approximately 11% of the Nasdaq. Microsoft has also up to 11% of the Nasdaq. Whereas if we look at smaller companies within the Nasdaq, such as Zoom, Zoom is not even making up 1% of the overall fund. Now, why is this important? This is important, ladies and gentlemen, because of course we need to understand which companies within the Nasdaq has 100 companies, which of these stocks are the most influential stocks. Because if we're able to establish which stocks are the most influential stocks, then we know where we need to aim our analysis in order to ensure that our analysis is accurate and successful. So this is why weighted index is important to understand that the index is priced based on the weighted methods. The fund, if for example, it could be a fund of $100,000, a larger percentage will be exposed to certain stocks. And this is something that we're going to look at also on another slide. So a very quick introduction to the Nasdaq, because we're going to look at the Nasdaq today as well, and we're going to look at understanding how the price is likely to move potentially over the next couple of days. Now, the first thing I want to say as part of the Nasdaq is that the Nasdaq is specifically known to be exposed to a category of stocks known as growth stocks. Now, what are the characteristics of growth stocks? Growth stocks, ladies and gentlemen, during during expansionary economic conditions. So when the economy is growing, we've got high employment, we're looking at high investor sentiment, most likely interest rates are also declining as well. These stocks tend to increase rapidly in value. So when we look at good market conditions, these stocks perform extremely well. And another characteristic of these stocks is they don't pay dividends, because all stocks will pay dividends 4 times a year. So every 3 months, they will pay a dividend. Most growth stocks don't pay a dividend, very simply because they know investors will keep on investing because the stocks grow so fast in value. It also has been the best performing index of 2023. So this year so far, ladies and gentlemen, the stock has increased by 47.5%. Now, if we're going to look at other investments, if we're going to look at, for example, savings accounts, if we're going to look at the bond market, we're going to look at the gilt market, if we're going to look at other tradable assets as well, a return of 47.5% is a significant increase in value. So this is why the Nasdaq is also extremely important. And we're going to explain why it has been increasing in value and what potentially is going to cause it to either increase or decrease throughout the rest of the week. I've got a question. Let me quickly read the question. So we've got a question here. Does the dollar index have a correlation with indices? We've got a specific slide based on this. There are certain factors that analysts and professional traders concentrate on in order to establish whether the price of the Nasdaq is going to increase or decrease in value. We've spoken about one already. Number one is the stock market globally generally increasing in value? If it's been increasing in value in the European session and the Asian session, then most likely it potentially can do something like that in the US session. Now, the other thing is the US dollar, which is known as a safe haven asset. So if the US dollar is increasing in value, most likely it's because of one of two things. Number one, there's a lower risk appetite in the market. So people don't want risk-based assets such as the stock market, but they prefer very safe assets like the dollar. So that if, for example, the dollar is increasing in value, it can indicate the stock market is going to decrease in value. Or vice versa. If the US dollar is declining, it indicates a strong investor sentiment, which is positive for the stock market. And in addition to this, if we've got a weaker dollar, it means all these foreign buyers, which are investing in the Nasdaq, are able to take advantage of the Nasdaq at a cheaper price. Why? Because the exchange rate has suddenly gone in their favor. So because of that, it again can prompt them to buy and increase demand. So this is another thing as well. So yes, the US dollar is definitely correlated and can influence the Nasdaq, but we're going to dive into this in more detail over the next few minutes because there's also other factors to look at as well. For example, the bond market, specifically the 10-year US Treasury bills, have again a very strong influence over the price movement of the Nasdaq, and not just the Nasdaq, but other US-based indices such as the Dow Jones, the S&P 500, and also the Nasdaq. So I've got another question here. I'm trying to open a HFM account, but it doesn't give me confirmation code. Something which is related to technical aspects. Either if you can go into our live chat and speak to our support team, or you can send us an email, and I'll be more than happy to come back to you in a very short period of time with the answer to that question. Of course, we can assist with these factors as well. So very quickly, let's go through the rest of this slide. This year so far, it has increased by 47.5%. Why? Because the interest rate hiking cycle is coming to the end. Also, in addition to this, we've had the drive from the AI market. So artificial intelligence has significantly increased profits for these technology-based companies. For example, a good example of this is Microsoft, Alphabet, and also Nvidia. Nvidia, we've got their earnings reports being released today. This is an event which is going to drive the price. And if we look at the price movement over the longer term, for example, over the past 5 years, the price has increased by almost 150%. So a massive increase, ladies and gentlemen. And the Nasdaq, like I mentioned, is 100 stocks, mainly exposed to the technology market and mainly exposed to growth stocks. Now, ladies and gentlemen, this is the exact opposite to the Dow Jones. Doesn't mean they're not correlated, they are still correlated. But what it does mean is if the Nasdaq is significantly increasing in value, the Dow Jones will increase in value, but it will be a lower increase. Whereas if the Nasdaq is doing very poorly, for example, we saw some very strong downward price movement today, which is great because as traders, we can speculate the price is going to move downwards and profit from this price movement. Whereas the Dow Jones, it will see a better price condition. So it works in both ways. The Dow Jones is exposed to what is known as defensive stocks. Defensive stocks, ladies and gentlemen, are very simply stocks which tend to do well in adverse market conditions. So for example, if in a recession, of course, if we look at a recession, most stocks, for obvious reasons, tend to perform poorly. But of course, that creates a lot of great opportunity for us because we can speculate that the price is going to decline, and we can potentially profit off this downward price movement. But defensive stocks, ladies and gentlemen, in the negative market conditions, tend to do well. They tend to either increase in value or they see a smaller decline. For example, if we look at let's say Apple, which is a growth stock, in a negative market condition, just as an example, it may decline by 10%. Whereas if we look at Procter & Gamble or Walmart, which is a defensive stock, it may decline by 2%. So there's a very big difference. So the Dow Jones, ladies and gentlemen, it is exposed significantly to defensive stocks, and it performs well in an adverse market condition, which is also why it was the best performing index in 2022, because we saw a very significant decline in stocks, but the Dow Jones performed much better than the rest of the stock market. In 2023 so far, it's increased in value by 6%. Over the past 5 years, it's increased in value by 45%. Why is one of the reasons why it's a defensive stock? Because these companies pay very high dividends. So for example, we look at the Nasdaq, the dividend yield. So the percentage that they're paying back to you, for example, if you invest $1,000 into the Dow Jones, how much are they going to give back? They will give back over 4%, 4.08%. It's actually slightly higher today because the price has been slightly discounted. Whereas if we're looking at the Nasdaq, it's only giving back 1.60%. So there's a big difference there. So this is also why it's known as a defensive stock, because if you invest in the Dow Jones, it pays a significant amount of dividends. Now, the most influential stocks. Now, we had a lot of questions. How can I determine if today the price of the Dow Jones, of the Nasdaq, of the S&P 500, how do I know if it's going to increase in value? Now, there's two things to note in regards to this. This is now where we're starting to go slightly more advanced and start to also get a better understanding of how to potentially understand how the price is going to move. Now, this, ladies and gentlemen, something is a table, but it's something that you can find very, very easily just by doing your own search on Google. If you type in on Google the NASDAQ and type in components, like this here, NASDAQ components, it will bring you up this table here. There's many websites, they will all give you the same table. You can use any one. Now, what is this chart going to show you? It's showing you here which stocks are the most influential stocks. And why are they the most influential stocks? If you look at weight here, this is showing you what percentage of the NASDAQ is made up of this stock. So 11% of the NASDAQ is made up of Apple stocks. 10% of the NASDAQ is made up of Microsoft stocks. So just by looking at these two stocks, we're already analyzing more than 20% of the NASDAQ, which has 100 companies, but we're just analyzing two. So here, ladies and gentlemen, I'm not showing the full 100, but I'm showing you the top 20 most influential stocks. Now, this website, in addition to this, it will show you here on the very right side the performance of the price so far today. So you can see, ladies and gentlemen, if I just get my pen out a moment. It's not letting me. So if you follow the laser, you can see here, if I'm looking at the 10 most influential stocks. So here, for example, we've got Apple, Microsoft, Amazon, Nvidia, Alphabet, which is also the brand is known as Google. All these companies here, you can see today are declining in value. So just by simply looking at this website and seeing out of the most influential stocks within the NASDAQ, what percentage of these most influential stocks are increasing in value or decreasing in value? If most of these individual stocks are increasing in value, then of course there's a strong possibility that potentially the NASDAQ is increasing in value. If we're looking at these individual stocks, the most influential, like you can see here, and most of them are green and increasing in value, then this is an indication that actually the price is going to increase in value. If it's red, like we can see on the price now, it's an indication it's going to decrease in value. So this was taken over an hour ago. And if we look at the MT4, ladies and gentlemen, we can actually see that the price is decreasing in value. If we look at the price movement of the of the NASDAQ, just over the past 1 hour, ladies and gentlemen, I'll tell you exactly now, it's decreased in value by 0.30%. And this was taken over an hour ago. So just by looking at the fact that most of the most influential stocks are decreasing in value today, it is an indication, it is something that you can use to determine that the NASDAQ is going to decrease in value. And this is something you can do by yourself each and every day, again and again. So for example, here, only 15%, so only 3 of the top 20 stocks are increasing in value. 3 of the top 20 influential stocks have managed to increase in value. And to be honest, if we look at, for example, Costco, it's barely increasing in value, 0.06%, something to brag about. So we can see here most of the stocks are decreasing in value. So there's an opportunity to speculate that the NASDAQ is going to decrease in value. This is something that we looked at our market analysis in the morning yesterday, so Monday morning. We looked at this and we saw that actually 100% of the top 10 influential stocks increased in value, were increasing in value, and it was 90% of the whole NASDAQ was increasing in value. And we used that in the morning to indicate that the NASDAQ was going to increase in value. It increased in value, it broke through resistance points, it rose to its highest level since January of 2022. And you can do the same today and again and again. So you can use this, ladies and gentlemen, to give you an indication of how the NASDAQ is going to develop over the next coming days. Now, I've got another question here. Why has the NASDAQ been declining in value? So, like I said yesterday, the NASDAQ actually increased in value by 1.20%. It increased a new high, renewed this high, but today it's decreasing in value. The reason why it's decreasing in value today is twofold. There's two reasons. Number one, it's increased in value significantly over the past 3 weeks. In 3 weeks, it has been consecutively increasing in value. So everybody, of course, which is buying, some of these individuals are now starting to consider, I've invested, I've made a lot of profit, let's cash in my investments and cash in my profit. So there's technical aspects to why it's declining like this. But in addition to this as well, we also need to take into consideration that we have major events today as well. So we've got two major events that I'm mentioning here. So the first is related to interest rates. So the central bank's interest rate. The interest rate, ladies and gentlemen, affects the stock market for two reasons. Number one, if interest rates are increasing in value, it means that your mortgage, your loans, your credit cards, debt in general is becoming more expensive. Because it's becoming more expensive, what it actually means is that you are going to spend less money at these companies. So these companies will earn a lower profit. In addition to this, it also means that other investments, such as savings account and the US dollar, are giving a better return. They're more profitable. So investors are more prompted and convinced to, instead of investing in the stock market, to actually save, because the savings account is no longer giving them 1%, but it's actually giving them 2%, 3%, 4%. So this is another reason as well. Other markets become more successful and convince more investors. So an event today, which is actually going to happen at 7 o'clock GMT, is the Federal Open Market Committee meeting minutes. Now, what is this committee? This is the committee in the Central Bank of America, the Federal Reserve, and they decide how interest rates need to be changed. Over the past 2 years, interest rates have again and again and again increased in value, and at times have significantly pressured the stock market. Now it is believed that the committee is going to indicate that that interest rates will no longer increase, and potentially that interest rates may actually need to be cut in the early half of 2024. Now, if we get any indications from the meeting minutes, which is very simply just a report to say what was spoken in the meeting, if there's any indications that there's not going to be any more interest rate hikes, and in addition to this, that there is going to be an interest rate cut next year, then it could support the stock market. Why? Because it makes the stock market potentially more competitive, higher returns, and higher consumer demand, which is positive for the stock market. In addition to this, we've also got NVIDIA. If we go back to this slide, ladies and gentlemen, we can see NVIDIA here. It is the fourth most influential stock for the NASDAQ. So it can create a lot of volatility and support the NASDAQ. They are going to release their earnings figure. Now, their earnings figure, if it's positive, if they're earning more than what was expected, and they sold more than what was expected, there's a strong possibility that potentially the stock is going to increase in value. If we do get such earnings, the earnings will be released very late tonight. So we also will see the price being affected tomorrow as well. If we get such earnings reports, then it can be positive for the stock market and the NASDAQ. So these are two factors, two events that we need to keep an eye on to determine if the price is actually going to increase in value or decrease in value. If we're going to get a dovish meeting minutes, so if the Federal Reserve, the central bank, is going to come out and say, we may cut next year, but we're definitely also not going to hike anymore, which is dovish, And in addition to this, NVIDIA released higher than expected earnings like they have done over the past year. Then we're starting to look at more potential again for the Nasdaq increase in value. And the fact that the Nasdaq has decreased in value today, it's just an advantage for us tomorrow. If there's potential that the Nasdaq is going to increase in value and today is at a lower price, it means we're able to enter and take advantage of the lower price. So of course, this is something that we're going to definitely take into consideration as well. It's another thing for us to look at to determine if the price is going to increase or decrease. Now, somebody mentioned the US dollar. So here, ladies and gentlemen, I've got the US dollar index. It's the value of the US dollar against 6 currencies. So here, ladies and gentlemen, very simply, there's a correlation between the US dollar and the stock market. On many occasions, if the US dollar is declining, the stock market improves. If the US dollar is increasing in value, the stock market decreases in value. Now, today is the rare scenario where the US dollar is actually decreasing in value and also the stock market is decreasing in value. Why is the stock market decreasing in value? We've said this already, because we've got some events tonight and investors have already made a lot of profit over the past 3 weeks and they're cashing in this profit. But what we need to take into consideration is if the US dollar continues to decline. Because if it's going to continue to decline and we're going to get a positive release from the meeting minutes and a positive release from NVIDIA's quarterly earnings, again, there's potential there for an opportunity to speculate a price increase. Then we've got, ladies and gentlemen, bond yields. So here we've got the charts for US 10-year bond yields. The bond yields today, ladies and gentlemen, they're slightly lower. It's not significantly lower. But again, we don't want to have these webinars just very simply to tell you whether to buy or to sell, because of course we don't give financial advice. What we want to do is give you the knowledge and the ways to trade yourself with confidence and with knowledge. So for you to be able to establish if the prices of the Nasdaq and stocks are going to decrease or decrease. This is what we want to do. So this as well is significantly important. The bond yields. If bond yields are decreasing, it means there's more likely to be more demand for the stock market. If bond yields are increasing, most likely a lot of individuals are going to be ditching their stocks, in which case stocks are going to be pressured. So if we look at these correlations on a daily basis, and also here, point number 3, the performance of European and Asian stocks as well. Specifically European stocks, less Asian stocks, but you can look at that as well, of course. If we look at a scenario where the US dollar is decreasing, bond yields are decreasing, and European and Asian stocks are increasing in value, by the time the US opens in the afternoon, we have indications that the US market potentially is going to do very well. Whereas if the US dollar is increasing in value and bond yields are also increasing in value, and European and Asian stocks are declining, then we've got an indication before the US market opens that the US market is also going to decline potentially as well. So the Federal meeting minutes and NVIDIA's quarterly earnings, this chart here is something that we specifically want to concentrate on. I've taken it exactly directly as a screenshot from Google, specifically because I want to show you that you personally can access it. Very simply, just typing in NVIDIA, which is the company. Like we said, it's the 4th most influential stock for the Nasdaq. NVIDIA earnings, and it'll bring you up this chart. So it shows you it is expected that the earnings per share is going to be $3.39. The revenue, ladies and gentlemen, is expected to come in at just over $60 million. Now, if we can compare this to what was reported last time, so you can see the revenue was $13.5 billion, earnings per share was $2.70. You can see there's a significant increase now. So if the earnings and the revenue comes in higher than expected, especially if we're seeing it significantly higher than expected. So for example, here last time we saw it was 20% higher and 30% higher. If you look at the performance of the NVIDIA over the past 3 months since this earnings report, you can see it's significantly increased in value. We get another scenario where we're looking at significantly higher earnings, higher revenue as well, then there's a good possibility that potentially Nvidia stocks are also going to increase in value. If they are going to increase in value, it will support the price of the Nasdaq. So this is definitely something that I wanted to concentrate on. If we look at the price movement of Nvidia this year so far, it's increased in value by 255%. Just this year, 255%. That's the profit. Whereas if we look at savings account, we may be earning 2%, 3%, 4%, whatever it may be. And also if we compare to other stocks and commodities and so on and so forth, it's not getting close to 255% profit in 2023 alone. Again, as part of this slide, I want everybody to be aware that, of course, the Nasdaq's declining today because people are exiting the market before these events, before the FOMC, which is the Federal Open Market Committee, meeting minutes, which is going to be released in 1 hour, and Nvidia, which is going to be released late tonight. If both of these are in favor of the Nasdaq, then of course there is a good possibility the Nasdaq is going to increase in value. Here, ladies and gentlemen, it's a very helpful tool. It's from the Chicago Exchange, so the CME. If you type this in on Google, it'll take you to the Chicago Exchange website. This is the Fed Watch tool. So this is basically traders and market participants voting, not just any traders, but professional traders and institutions like JP Morgan, Goldman Sachs, voting on whether they believe there's going to be a hike, a cut, or a hold. So in March's meeting, 28% believe that the Federal Reserve will cut. Now, if we see that 28% increase in value, again, it can support the Nasdaq. So this is again something that not only you can look at throughout the rest of the week to determine whether the Nasdaq is going to increase or decrease in value, but generally speaking, throughout the rest of the year and years to come. Because the more possibility of a cut, the more possibility there is a bullish price movement of the Nasdaq. Now, why may there be a higher possibility of a cut? Very simply, we get in a scenario where we've got positive economic data, but not necessarily major economic growth. And we're also looking at lower inflation, like you can see here, lower producer and consumer inflation. This is the ideal scenario where a cut is going to become significantly more likely. Why? Because we don't have major economic growth, so there's no worry there that there's going to be another surge in inflation. At the same time, we've got positive economic data, so it's not going to have a negative effect on the stock market. Because if we see a full-blown recession, yes, we're going to see lower interest rates, but we can also see a lot of sellers on the stock market. So we don't want, a recession. We want positive economic data, but not major economic growth. And of course, very important, low producer and consumer inflation. If we're able to get these factors here, ladies and gentlemen, especially if crude and Brent oil also really start to depreciate as well. If we're looking at the price movement today, it's not really depreciated or appreciated. But if we're also able to get energy prices down, then again, this is another possibility of interest rate hike, a cut becoming more a higher possibility. So this is also something for you to concentrate on. Now, this, ladies and gentlemen, is something very rare. It's not something that everybody has access to. Normally, only professional traders have access to this. But I'm sharing my screen because it's very helpful information, ladies and gentlemen, because this is showing you how many buyers and sellers there is within the market. People may be looking at this chart and saying, there's a lot of numbers here. I have no idea what these numbers are telling me. It's too difficult. It is very, very simple, ladies and gentlemen. So what are these bars, these numbers here? This row here, ladies and gentlemen, is telling us in each and every candlestick how many buyers and how many sellers there is. If the figure is minus, so for example here, minus 26,000, minus 43,000. This is what's up here, ladies and gentlemen. It means there's more sellers than buyers because it's minus. And you can see since these candlesticks here, the price has declined. Whereas if we look at this here, 58,000 more buyers, and you can see the price increases in value. Now, like I said, if we're looking at the price movement today, the price has been significantly decreasing in value. This can help us because if we look at the second row as well, it tells us whether there's more buyers or sellers today so far. So you can see here there's 147 more sellers than buyers today. So of course, when there's more sellers than there is of buyers, there's a strong possibility the price is going to decline. If there's more buyers than sellers, there's a strong possibility that the price is going to increase in value. And this line here, ladies and gentlemen, is giving us the average price based on volume, though not just simple moving average, but it's based on volume, the volume weighted average price. So all this indication here, ladies and gentlemen, is indicating that the price is going to decrease in value. What has happened today so far? The price has significantly decreased in value. And we could have seen that it was going to decrease in value because look at this here, ladies and gentlemen. We can see throughout the day, we have seen there be more sellers than buyers, ladies and gentlemen. For example, at the moment, we can see 147,000 more buyers, that's more sellers than buyers. So we can see here an indication the price is going to decline. But we of course need to take into consideration that we've got major events later on today, ladies and gentlemen. We have the meeting minutes and NVIDIA's earnings report as well. Now, if you want to subscribe to our channel, we of course can give you continuously access to seeing if there's more buyers or sellers within the market, because those buyers and sellers and that number of trades is directly being given to us from the Chicago exchange, from the SME exchange. So it's very helpful information because you're able to see today is there more buyers or is there more sellers. And you can use this to determine whether the price is going to increase or if the price is actually going to decrease in value. Now here we're looking at the Nasdaq. We've got three more slides, ladies and gentlemen. We'll end today's webinar. Here we've got the Nasdaq. You can see here exactly what I'm referring to, strong upward price movement, clear impulse waves. You can look at these impulse waves, ladies and gentlemen. But today, we've got downward price movement. Now, it's not significant downward price movement, but we've got downward price movement nonetheless. Now here, ladies and gentlemen, this line here is a trend line. It's a 60 bar moving average. Now, if the price continues to decline to this moving average here, potentially we're going to find support. Whereas here, ladies and gentlemen, this line is what is known as a sentiment line. Now, as long as the price is going to stay above both of these lines, then we have indications that the price is going to continue to increase in value. This decline here is very simply just giving us the opportunity to be able to purchase at a cheaper price to take advantage of the upward trend. But of course, we're not going to trade upwards while the price is declining. We wait for the opportunity for the price to increase in value. This is something that we're going to be looking at today. If we look at the oscillator is trading between 50 and 75. So still we got indications here of upward price movement. Just though we've got an indication of downward price movement, potentially maybe up to the Federal Open Market meeting minutes. After the meeting minutes, depending on the announcement, we will see the volatility and how these indications change. But at the moment, we're above the trend line, we're above the sentiment line, we're above the 50 on the RSI. So far, we still have indications that the price, at some point, maybe even if it's later on today, is going to increase in value. Now here, ladies and gentlemen, we've got the Nasdaq again, but we've got a regression channel. So this channel here has three zones. We have the yellow here, which is the trend zone. We have the retracement zone, which is the orange, and the red zone is the correction. Now at the moment, we've gone to the correction zone. As long as we don't cross below the correction zone, and also here we've got what is known as the resistance level being flipped to the support level. We're at an area where the price can potentially find support. Now, if we're going to cross below the red zone, then there's an indication that actually we may see downward price movement, but only if the regression channel starts to widen downwards. We ideally want the regression channel to look like this. You can see it's widening, there's no crossovers, and the price is trading above the regression channel, like this here, ladies and gentlemen. So that is how we get an indication of downward upward price movement. In order to get an indication downward price movement, we need the same, but below the regression channel. Now, like I said, the price movement is going to be at the moment driven depending on the meeting minutes. Now, the meeting minutes are going to create volatility. If it shoots upwards above the regression channel, then we may start to get indications that the price is going to increase. If it shoots below and there's more momentum downwards, then potentially we may look at a correction all the way to the previous low here, so to the lower side of the previous price range. Now, if we look at a 15-minute time frame, again, we get an indication that today the price is going to decline because we have a downward crossover here. So you can see the yellow crossed over downwards here, ladies and gentlemen. This is a 14 bar moving average and an 8 bar moving average. So latest indication is downward price movement, but again, we'll see the meeting minutes, because if that's positive, we may get a shoot upwards. If it's negative, of course, it may actually shoot downwards. So we need to take into consideration whether, yes, at the moment we've got a downward indication because we've got a downward crossover. The stochastic oscillator is currently at 32, which is below the 50. So we have indications there of downward price movements. But in the short term, meeting minutes will be released in 1 hour. Later on this evening, we also will have NVIDIA's quarterly earnings report. Now, that is going to indicate a dovish monetary policy and interest rate hikes and interest rate pauses, and NVIDIA's earnings per share and revenue is higher, then again, like I said, we may get a strong bullish crossover. So if the yellow crosses above the red, then we have indication of upward price movement. So, ladies and gentlemen, that brings us to the end of today's webinar. Hopefully it was educational and informative. Now I will leave some time if anybody has any questions. If anybody has any questions, we will allow 5 minutes and I will answer everybody's questions. Otherwise, we will end today's webinar. Any questions, ladies and gentlemen, feel free to ask through the comment section. So I've got it's just a comment. Somebody really liked the weighted index and how we can use the most influential stocks to determine how the price is going to move. So yes, keep in mind that it's a weighted index, so certain stocks have higher exposure to the Nasdaq. So of course, those stocks are really driving the price movement. So for example, today, NVIDIA's earnings report, it's the 4th most influential stock. So yes, if the earnings per share and the revenue is higher, then it can really strongly potentially push the Nasdaq higher as well. I've got another individual who says he has a question. If you type in the question on the chat, I will be able to answer it live. Any questions, ladies and gentlemen, feel free to ask now. If anybody's entered late on in the webinar, they can, of course, go to YouTube and type in HFM, so HF Markets, and you can see the webinar recording, of course. And if you want more access to actually seeing whether there's more buyers and sellers, it's what is known as order flow analysis, then of course subscribe to our channel and we will give you access through again and again live webinars, whether there's more buyers or sellers. So those individuals that have just entered into the webinar, we show traders how they can actually see on the stock market whether there's more buyers or more sellers within the market. So I've got an individual saying, what's the first thing I need to do? There's a few things that you can do. If we ignore this regression channel here, because it's slightly more advanced, if we want something basic, is you need to establish what is the main trend line on a medium-term time frame. So for example, this is the medium-term time frame, it's a 2-hour time frame. So I've got a trend line and I've got a sentiment line. You can use either or. Now, if the price is above, doesn't mean we're always going to see upward price movement. So you can see downward price movement here, but it means in the longer, short and longer term, we're going to see upward price movement if the price is above. So we've already established in this area here, we need to look at where there's opportunities to buy and be cautious about speculating a decline because we're looking at a bullish market. Whereas if the price is below these lines, of course, you don't have to have 2 lines, you can stick to one of them. So for example, this is 140, this is 60 bar exponential moving average. If it's below, then looking at opportunities to speculate a decline. And here we've got an RSI. If it's between 50 and 75, speculating a price increase. Between 50 and 25, speculating a price decrease. Well, another thing you can also use, if anybody has any questions, I'll leave another minute if anybody wants to ask, is this here, ladies and gentlemen. So this is what is known as a crossover. So here I've got the red line, which is a 14-bar simple moving average. And then the yellow is an 8-bar exponential moving average. Now, when we get crossovers, so for example, here you can see it crossed downwards, the yellow went from above to below. This is indicating the price is going to decline, and you can see the price start to decline. And you can see here as well, another downward crossover. So you can see the price again move downwards. So yes, a moving average is not going to solve all your problems, but it can help you understand where the price is going to move. What is important though is that you look at a medium-term time frame like this to establish the longer and medium-term price movement, and then to look at a smaller time frame and look at a crossover there. So that way you've not got conflicting signals. You have longer-term upward price movement, short-term concentrating on upward price movement. So ladies and gentlemen, that's the end of today's webinar. Trade safe, trade responsibly. Hopefully you found it educational. Feel free to subscribe and visit our website because we do have again and again more webinars. We have live analysis. Each webinar is based on a different topic as well. And if you subscribe, you can get instant and free access again and again and again. I've got another question. So if you've got another question here, what else can I use to establish if the price is going to increase or decrease? Something very helpful, which I mentioned, is this here, ladies and gentlemen. This is the most influential stocks, and this is their performance today. Now, there's different methods. Some people say that if 75% are increasing in value, I will consider looking at opportunities to buy. If 75% are red, so for example, at the moment, 85% are red, I will look at opportunities to sell, and so on and so forth. So this is also a very helpful and helpful tool that you can use. You can get access to this very simply just by typing in NASDAQ components into Google, and this website will come up. So that's the end of today's webinar, ladies and gentlemen. Trade safe, trade responsibly, and hopefully we'll see you very soon on one of our webinars. In the meantime, enjoy the rest of your evening and